in a new long-term trend of markets that will not be able to form at the levels that they used to, both stocks and bonds, because the United States can no longer just print money without no repercussions for it. So I really don't think the stock market can see any new all-time highs for as far out as eyes can see. I still don't think there's a crash. I've never been in the crash camp. Gold and silver are your best hard asset hedges. They're a whole lot better than art and collectibles and even real estate.
Since 1980, the stock market has exhibited a consistent pattern of experiencing drops of more than 10% approximately every 1.2 years. While never enjoyable, these downturns are integral to the investment landscape. Interestingly, despite prevailing market fear, 2023 has proven to be a notably strong year for investors. Notably, the challenges encountered in August and September align with the historical seasonality of the market, making them less surprising. This underperformance has led many investors to seek secure investments like gold and silver, widely regarded as safe havens during market declines. The value of gold typically remains relatively stable, even as market prices fluctuate. For instance, during the 2007 stock market collapse, investment demand for gold surged, doubling its value between 2007 and 2011. According to financial advisor and market analyst Peter Grandich, financial markets are undergoing significant changes impacting stocks and bonds. These markets won't be able to reach the same levels as before because the United States can no longer print money without consequences. As a result, Peter does not foresee new all-time highs in the stock market for the foreseeable future, expecting the markets to underperform. While discussing the financial markets, Peter anticipates a sharp distinction between the paper market, where financial instruments are traded, and the physical market, where tangible assets like gold and silver are bought and sold. The paper market can be prone to short-term fluctuations and manipulation, whereas the physical market tends to be more stable and resilient. Despite periodic disturbances in the paper market, there is a growing trend of individuals seeking refuge in physical assets like gold and silver due to their historical track record of retaining value. We will now bring you clips from Peter Grandich's interview with Liberty and Finance. But before we do, if you want more videos like this, hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Since January that I've said that the BLS, the Bureau of Labor Statistics, where I've just put up a post and said, take the L away because they should just be called the BS, because that's what it is, has totally abdicated any rhyme and reason of pure, useful modeling on potential of what truly the employment numbers are. And you only have to see that because of this discrepancy constantly with the ADP number or the JOLT reporting that's done a couple of days beforehand. And it's absurd that we had it for every month. And then finally last month, they came out and said, oh, sorry, but we made a mistake every month beforehand. We lowered our number. And now they've come out with a number that's twice as high as the highest potential prediction. And understand about economists. They basically use the same type of modeling. They're modeling on the basis of what they think the BLS is modeling. I'm assuming the Federal Reserve depends on these numbers as well. And if you take this at face value, then their hope of any time soon of easing the rise of interest rates and the pressures that that's causing on consumers and all is not going to happen. But what I said when that came out is these numbers are a farce. It would be no surprise that the markets would reverse, the mellow markets, the bonds, and the stock market. And it did, because I think people woke up and said, this number is not real. But having said all that, the fact that we cannot really trust numbers now is a really, really concerning factor on where basically Americans, Elijah, have lost trust in all forms of government. We just watched this week a split now within the Republican Party. Now, not only can the Democrats and Republicans not get in the same room and do anything, we have factions within the same parties that can't go in the same room. So it's mind-boggling. It's not surprising that there's a relief rally going on. But you're right. The declining stock market played a little bit of a role of the metals coming down. But I really, really think that the physical market is the judge. See, if I could talk to someone like you that's buying and selling for people all day and say, listen, during this decline, were people showing up saying, listen, I want to get rid of my gold. I want to get in, I want to get out. It doesn't look good. No, everything I'm hearing is this is causing more people to step up and buy. So it's the paper market. It's been like this for years. Thankfully, the move towards Asia taking more influence on the gold market will lessen these type of raids. They don't last as long, and they create opportunity. And I have to say it's truly an opportunity. And I think maybe one of the last ones for people that yet don't have any exposure to gold and silver to do so. Now, when 2023 rolled around, I did not say, boy, it's time to go back in with both feet. In fact, I did say to people who found themselves in 2022 with too much equity, please, let's have a rally through at least the first half of the year and use it to lower that exposure so you don't have that same mental and financial anguish you had in 2022. And sure enough, we got to July, and I said, I think that really basically is it for this rally. It's a counter trend rally in a new long-term trend of markets that will not be able to form at the levels that they used to, both stocks and bonds, because the United States can no longer just print money without no repercussions for it.
Gold prices registered substantial gains of over 1% on Monday, settling above the mid-$1,800. Despite the overnight dovish remarks by Federal Reserve officials, the markets are still pricing in the possibility of at least one more rate hike by the end of this year. Peter emphasizes that current market conditions present a unique buying opportunity for precious metals, particularly gold and silver. He mentions a recent development where interest rates rose sharply and the U.S. dollar strengthened more than expected. This caused a temporary setback in the prices of gold and silver, mainly due to paper market trading. Notably, the U.S. dollar eased against a basket of currencies on Friday as investors assessed the jobs report, which showed that U.S. hiring rose broadly in September and indicated slowing wage growth. The renowned analyst observes that, historically, when such situations occur, it presents an excellent opportunity for investors to enter the precious metals market. For instance, a year ago, gold was trading at $1,650 per ounce, currently at $1,825, suggesting that this level remains favorable for investment. He recommends owning precious metals like gold and silver as insurance against the current political, social, and economic uncertainties. Let's get back to the interview.
Monday morning quarterback on a Friday afternoon. Interest rates rose a lot sharper, and the dollar got stronger off it than we expected. Gold, especially, but even silver, did a good job through most of that rise. It really held its own. It, had reasons to sell off early. It didn't, but finally the paper chasers got what they wanted. We didn't see the attack in the physical market. We almost never do. We always see it in the paper market. And it broke some supports, and momentum traders came in. But we're really back to a level that has offered excellent opportunity before. And again, I remind everybody, a year ago, we were looking at 1650. So is 1825 that bad, given we were 1650 a year ago? I don't normally say this. I think people follow me notice, but I will say this: it's a buying opportunity, and it really is, and it really is a time. And I think now that the fundamentals, Elijah, for the political, social, and economic troubles that America is in now, never has it been more warranted to own the metals for a bare minimum as insurance. And let me explain this, because I've had this talk in recent days in our planning group. And I don't sell gold. I don't have anything on that end to do with it. But I told the people we were speaking with is, right now you have health insurance, car insurance, home insurance, all for in case something happens and it doesn't hurt you financially. Where do you have that in your general equities portfolio? 98% of the public still has little or no real insurance against their financial assets, stocks and bonds. And this is important. And this is something the Don't Worry Be Happy crowd has gotten away with murder, because it's the Don't Worry Be Happy crowd that reports on the Don't Worry Be Happy crowd. And that is, we've had tremendous losses in fixed income. I mean, banks, there isn't a bank basically around that doesn't have paper losses on its holdings. And 3 years of sharp declines in the bond market And, you're not supposed to lose double digits when you buy bonds. You're supposed to make a return. And those folks, most of them, if not all, almost all of them, have real no hedging in place. And always, gold and silver are your best hard asset hedges. They're a whole lot better than art and collectibles and even real estate. And I'm singing to the choir. I know that's your livelihood, but I'd be saying this if I was on national TV. This is the time now where people should really start to say enough is enough. I need to minimally hedge my paper portfolio and what's happening in the world today.
Gold often becomes an attractive investment option during stock market or economic crises due to its inverse relationship with equities. This precious metal serves as a haven, protecting portfolios from the volatility of various economic factors. Gold's value remains relatively stable, even when macroeconomic and microeconomic influences impact other asset classes. Do you also believe this is the best time to invest in precious metals? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.